All right, so we're seeing retail fall. We're not quite sure what to expect from bank earnings, and we've got some Fed speeches today. Here to join us and talk about it is Jonathan Corpina of Meridian Equity Partners. Jonathan, what are you looking at in the markets today?
I think there are a couple of factors that are out there that's moving our markets and keeping our attention. Clearly, one is the government shutdown and the comments that come out of Washington on that. Everyone is closely paying attention to that because we could see how any comments that come out of Washington are moving our markets. And then we continue to talk about tariffs and China and the interaction there. One day everything's going fine, the next day things are slowed down and might not be moving forward. I think those two factors, Washington and China, are the two things that are moving our markets. We've seen a lot of volatility in our markets, for the last 8 weeks or so, but clearly, this week, definitely we've seen a lot of volatility, and it's based off of those two major headlines. Yes, there are other factors that are out there that are helping our markets move back and forth, but I think those two are the major ones we're looking at.
And do you think that the Fed speeches today will have any impact on the markets?
You know what? We always pay attention to those. The Fed speakers are very smart. They try not to tip their hands too much, and they do have a pretty good blueprint that they stick to. Wishful thinking, we get a little more information, a little more transparency as to what they're thinking, but I think they're going to use the same verbiage that they used before in the past. They're going to remain data dependent. They're going to watch to see how the global economies are growing or shrinking and help that in making their decisions moving forward.
And what about the retail sector? We're seeing all these stocks fall tremendously. What are your thoughts there?
All right, retail sector is something that usually for holiday sales normally gets a boost. It seems like this year has been the opposite of that, and we're clearly seeing pressure on that sector there. I don't think everybody was prepared for the impact that's having on our markets, and clearly the impact on those stocks there. We're seeing some of the big, major retailer names getting some significant pressure on them. But I think that's something that we're going to have to continue to watch.
And investors in the retail sector, should they start looking at more defensive sectors, do you think?
Listen, I think your portfolio should always have some areas that can add some padding for you within your portfolio, especially with all the volatility that we've seen. But retail sector seems like it's one has really transformed a lot, right? When you have a company like Amazon that slowly is just taking over everything in that area there, that competition has become very tough in the brick and mortar space. So I think investors do have to protect themselves in some areas.
We're gearing up for bank earnings. Do you have any expectations for them?
Historically over time, earnings season has been a buoy for our markets. Kind of helps move it higher as it's moving higher. When the markets have been selling off, it kind of changes and reverses that type of movement there. I think bank earnings, overall can help our markets. I just don't think they're going to be as strong as we've been expecting, right? Interest rate conversations, we continue with that. Mortgage lending, small businesses, this whole big pot out there. I think it's just been a difficult scenario for the financials, and also moving forward, unknown about how tariffs are going to affect everybody, what's going to happen with the government shutdown. There's so many unknowns out there that I think every sector out there can be affected by it.